if you're holding all your portfolio in the banks or Telstra, then that's not necessarily the best way to be. Or even all in the mining sector, that's not a great portfolio at all. And so what we want to produce is a market-like portfolio, but that produces the high level of income as well. And so CSL for us has been a great growth story over the last few years. And so even though its yield is less than 1%, it's allowed our portfolio to produce capital growth in an environment where growth stocks have been rallying strongly and value stocks or income stocks have been more challenged recently as well. And so we think even in an income portfolio, you should be holding some of the growth areas of the market that can provide capital growth to your portfolio as well, because that's very important. So we like ResMed as well at the moment, Sonic Healthcare, so a few of those kind of healthcare names that are quite good. We hold some of the gold miners as well, which aren't your traditional income names. They're producing low levels of income, but in this kind of environment where Donald Trump makes a new announcement, the stock market falls, but the gold stocks rally strongly, then it's good to have some gold in your portfolio as well. So they'd probably be some of the main areas. And their incomes are starting from a low base, so we're not expecting them to cut their dividends in any way. It's all part of having a diversified portfolio. So if the growth stocks are challenged going forward, then you might see some of the valuations of those healthcare stocks come off, but there's no signs of that currently. If you look at a share price of CSL or ResMed recently, they seem to be on a one-way track up at the moment. So that's another one that we'll be monitoring going forward. And if that starts to change, then we'll be looking to change our portfolios. But at the moment, we're pretty comfortable with our holdings in those stocks.